Everybody, we are live here. My name is Charlie Bathgate. I am the CEO of St. Lucian Wall Street Jesus, and I'm back here again with another interview with a member of the Steamroom. We like to do these from time to time to bring in some of our most impactful members, some of the members who people tell us, hey, this guy's got a really cool story, or he's doing something really unique in this room. You guys should talk to him. And that's what these interviews are all about. And that is what's brought us here today. With a longtime member of the Steamroom. His name is Matt Kelmon. Matt, say what's up.
What's up, Charlie?
Thanks for joining us today, man. Super appreciate you being here.
I mean, I'm so happy to be here. I love the room and anything I can do to help.
Dude, awesome. Yeah, really, really appreciate it. I mean, I think one of the best places to start is just maybe kind of give your like origin story. How did you come to trading, come to markets? Did you grow up in a family where people were talking about markets all day, or did you come to it on your own? Tell us how you got into trading in the first place.
So my dad was a stockbroker. I was 5 years old, and he had a sporting good business that was going really well and went to expand. And I was young, but something happened with the bank loans, and they had to shut it down. And one of his buddies said, "You'd make a great stockbroker." So he went to work for Smith Barney. I used to go in there from the first time I went in there, like they say in Goodfellas. Ever since I can remember, I wanted to be a stockbroker.
Was this where physically was this in the U.S.?
This was in Northern California. He had moved out to Stockton, California, to be close to the mountains. And so interesting spot. And a little fast forward there is he quickly became a very successful stockbroker. He was with Smith Barney, Harris, and Upham at the time, so that we're going way back. And the way he became successful is he was doing covered option writing. He was meeting farmers out in the valley, showing them, how it was similar to farming, and became very, very good at it, and got to be number 5 in the country for all of Smith Barney out of Stockton. It was Beverly Hills, New York, Stockton. It looked kind of funny, but
hell yes, I love it. That's awesome. Cool. So you grew up. I mean, it's funny. My dad grew up. He was a broker too. He was out of Denver, so not Wall Street, but yeah, it was in the family. So I kind of know what it's like to grow up in that culture where your dinner table conversations are a little bit different than somebody who's an accountant or something like that, right?
So I was watching Louis Rukeyser, in the afternoons with my dad, and then was wondering why on the West Coast he was gone before I'd wake up. Right. But I always loved the lifestyle. He had back in the day, you wore a suit, you had a nice car, and it was a different game. But it was something that looked interesting to me. I grew up mostly with my mom, single parent, living in Palo Alto, and different side of the story. My parents got married, had first child at 18 and me at 22, divorced shortly after. And so they lived apart. And I did not live a life of luxury with my mom in Palo Alto, although Palo Alto is different than it was back then today.
Right. Right. Different time. Yeah. Got you. Okay. So you kind of had like 2 lives going on, sometimes with your mom and sometimes being exposed to the broker side of things with your dad. It seems like kind of talking back and forth.
Yep. That was it. Mom in Palo Alto had I wouldn't trade my childhood for anything. Had a great experience, went to school on the Stanford campus for elementary school and through high school. Visited my dad on a lot of the weekends, and then spent my summers back in Gloucester, Massachusetts, to give my mom a break. And my mom and dad were both from Massachusetts and moved right when they had my older sister moved out to California.
Got you. Okay. And so then growing up, you saw your dad. Were you just like, this is it, this is what I'm doing? You went straight into finance, like from high school, from college, or what was the first step?
So right out of high school, right out of college, I went to University of Arizona, had a great time, obviously. And then I took a job at Nordstrom down in La Jolla. Okay, something to do. And I walked into an oldie discount. Ranchero has a similar story, I think. But the discount brokers were just kind of making a name for themselves. And I walked in there. The guy said, "You want to be a broker?" I said, "Absolutely." He said, "Let's get you in the training program," which involved a week in Detroit, So we scheduled that, flew out to Detroit, was all intent on getting through their 1 week program, and then getting placed in the La Jolla office. Thought, God, what a life! Broker, La Jolla, awesome. I get there, they stick me into a city called Livorno. If anyone's from Livorno, I'm not trying to say it's a terrible place, but it wasn't La Jolla. And then after a few days, they said, "Oh, we think you're doing great, and we're going to keep you here in Livorno." And I said, "Wait, La Jolla or Livorno?"
I'm sorry, I couldn't quite hear that. La Jolla, right?
So that was the end of that. It was enough for me to say, I want to do this, but that's not where I want to do it. Went back to San Diego and got a job at ML Stern, which is primarily at the time was a municipal bond broker. They were out of Beverly Hills, San Diego, and they had an office, I think, in Sacramento.
Okay.
Now, mind you, this is 1991, so we're not using computers. I've got a deck of 3x5 cards that I'm penciling leads on. We're cold calling, just like in the movies. Guys around the phone, cold calling the desert.
Hardcore, man.
Really good experience. But after a while, I'm young at the time, and I thought, geez, I'm cold calling 85-year-olds and wasn't killing it. The guys in the office who had been there forever were doing well, but it just didn't seem like what I wanted to do. So moved back up to Palo Alto, and with two other guys started our own. We bought a broker dealer off a guy in Paso Robles.
Okay.
And said, let's start calling friends and trying to pitch them on covered option writing.
And so you're now like 24, 25 or something?
24. Yeah.
And then you're all of a sudden you're running a broker dealer, and you're like,
running a broker dealer. We called it overnight success. We had zero assets under management. Tried to decide, whose turn it was to pay rent at the end of the, with the little, we were making commissions, oh, you need it more than I do this month, you take it. And let me set the stage on the time. This is early 90s. Again, no computer. We got a computer a couple of years later, and that's a funny story. But quotes were mostly over the phone. We had an executing broker up in San Francisco I was calling to get quotes for. By 93, 94, we were putting everyone in Cisco, Intel, and Microsoft. Those were the NVIDIA of the day. And writing calls against them. And timing was good. 94, Fed's cutting rates similar to today into an expansion. Market's doing well. We're going up, getting called out. It was very expensive at that time. Selling 1,000 shares of Cisco. Commission was like $700, whereas now it's nothing.
Right.
Options were $3 a contract. So different day and time. But we got caught in a really good environment for equities, and there was more interest in the market in general. And so we went from friends and family calling them to hiring a couple guys that we thought had pretty deep Rolodexes to do the same. Mm-hmm. Brought in a few more dollars. We got up to about maybe 15 million under management. And then the turning point for us was we went into, we met with a broker one day, regional broker. There was hundreds of regional broker dealers at that time that you've never heard of. We walked in and these guys said, this is excellent. Can we sign the selling agreement? And we said, we're not sure what that is, but it sounds great. Fast forward, we ended up with 500 selling agreements eventually. And so we were distributing not to individuals, but to mostly it was brokers back in the day, not advisors, because there was still a lot of money in the commission game. Now there's zero.
Yep.
So we were selling mostly to brokers, kind of pushed up assets under management to 40, 50 million. At that time, people said, we'd love to do this with a lower minimum. Would you launch a mutual fund? And we said, again, hadn't thought about it, but that sounds great. Launched a fund. Timing was really good, mid 90s. Quickly, we got 100 million into the fund in like a couple months, really quickly.
Wow.
launched a second fund and a third fund, and it really took off. We had two hedge funds and three varieties of covered option writing in public mutual funds.
Damn. So you were just sort of opportunistically making moves as doors opened up to you and saying, all right, we'll walk through that door. And as many sort of bootstrap businesses go, you just were like, let's figure it out as we go. And sounds like some luck, obviously a ton of hustle and hard work, but some right place and right time. And yeah, built kind of a mini empire there, sounds like.
So yes, there's the ups and the downs. So I'm on the upswing here. Yeah, things were going really well. By 1999, we launched our first fund. So that's that overnight success. I'm already 7 years deep. Right. We had a really good time bringing assets. Mutual funds were still had kind of a shine on them. Everyone wanted to be in funds. This was I think the first ETF was the Spider, and I think that might have been 93 or 94. So those weren't super popular yet, but right. Public mutual funds were. To spread the word, we hired a few outside wholesalers and then a couple inside wholesalers. And by the time we really got our momentum going in 99, 2000, we had 20 outside wholesalers, 10 inside wholesalers covering the whole country, getting new selling agreements, bringing in assets, and we were paying them basis points and kind of one-time basis points. And we got, when we really got on the radar, at one point we were the 13th fastest growing company from a revenue standpoint in the country, Inc. 500, the Inc. 500 list.
Damn. Wow.
Fast in the Bay Area. And the way we did that was we had a broker dealer, and obviously to run a mutual fund, you also have to be an advisor. So became duly registered. And we would trade. I was trading once the portfolios got up to, we had 800 million under management, doing all covered option writing. I was trading. I mean, it wasn't uncommon to be selling 10,000 Microsoft calls at a clip. Right. So, and we were trading through our own broker dealer. So we were charging ourselves $3 a contract. So the broker dealer side was doing probably better than the advisor side even.
Right.
So that was great. And then the effects of fee compression and commission compression kind of hit us.
Yep.
Our big source of revenue was commissions, and $3 a contract was kind of standard. And then it became $2, and then became $1. And then so the regulators came in and said, "Hey, how much are you paying in commissions to yourself for these transactions?" And we, straightforward said $3, and they said, "Well, we think that the going rate is closer to $1.75 or $2 now." And they gave us a notification saying, we want to take a look at your books. Mm-hmm. So this is where kind of the roller coaster took a little turn down.
Right.
When this happens, we have all these inside and outside wholesalers who only can say that we have an inquiry from the SEC, mm-hmm. But can't tell them what it is and can't tell them that we're innocent. So naturally, money starts to flow out. Well, yep. we'll pull it out and see what happens at the end. It drags on. I gave 20 plus hours of testimony to the SEC. At the end of the ordeal, we came out of it completely clean. We had to pay back some of the commission money. They call it, I forget what they call that, but there was no fine, which said to disgorge some of the money. But at that time, we had gone from 800 million down to about 350 million. So it was a pretty quick bleed.
Right.
And so that's it. We ended up selling the funds in 2008 to another advisor down in San Diego who still runs the fund today.
Got it. I mean, it's crazy to hear your story because it mirrors so much of what my dad went through running. It sounds like a smaller broker dealer, but out of Denver. And the 1-2 punch of commissions, just, that shrinking, and then the burden of way increased regulation. The smaller broker dealers, when you had, he would talk about FINRA and, SEC audits coming in, once a year, just because they were like, for whatever reason, politically, the fire got lit under their asses, having to go through that, the time, the opportunity costs, the financial costs, like, and similar to what you're talking about, my dad was running a completely clean, upstanding operation. He saw all of his competition just shut down. The only broker dealers that could really operate in that environment were much larger, better capitalized, BDs that had huge compliance teams and a room full of lawyers that could go deal with, the regulators. And it really changed the entire landscape of the broker dealer landscape. I mean, it's part of the building blocks of how we find ourselves in the current place that we're in now. Where people don't really run small BDs anymore. It's just not really. It's not really how it is.
No,
you can't do it.
You can't. There's no way to make a living, and we saw that, like you said, we saw it firsthand. Where we would even respond and say, do you just want there to be 3 or 4 big broker dealers and that's it? Because that's what it feels like, and that's the history of business in the United States. There's hundreds of car dealers, and then there's 3. And there's a couple that try to break in, but really, there's Walmart and there's Target, and then there's Costco. Ranchero. And
Ranchero's then like, damn right, there's Costco.
There's Costco.
Yeah. It's a new house for me, baby.
You can't run a mom and pop hardware store either. I grew up with those, loved them. Those, you can't run one of those unless you're doing it non-for-profit. So similar thing, but incredible experience. I left in 2008, set out on my own, and started my own advisor. So not a broker dealer. People with low cost basis stock that weren't going to sell it. I had run into some of this where, I run into an advisor and he said, I've got $5 million worth of Microsoft from my client. I don't charge him, I don't charge him fees for that because he doesn't want to sell it because he has such a low cost basis. My new game was creating cash flow against those positions. I was able to pay those advisors 50 basis points, charge another 100 basis points, and then I was doing call spreads against their positions. Quickly raised about 20 million doing that in assets, and then one of my 2 things happened as that was starting to get some traction. One of my clients was half my assets. He young guy at the time, late 40s, and he passed away one night.
Holy shit.
And so that was a bummer. 1, he was a friend of mine. 2, it was half my assets, which meant half my income. And then my dad passed away just out of nowhere, had a stroke about 2 weeks later. And so both of those things really kind of hit me. And I dragged it on for maybe a couple more months, but then I ended up shutting down that advisor and looking at some other stuff. I had some stuff that I was doing with my girlfriend at the time, who's now my wife, that we were doing as a little side hustle that went incredibly well. I can dig into that if you want, but it was an online, non-equity related business. And we became very successful at that. And so it took me on about a 5-year side mission.
Side mission.
Until side quest, until that eventually also shut down. And now I'm back in, I took a little stint as a bond broker, but now I've launched my own advisor again. I'm doing mostly covered option writing, but also a holistic approach to managing money for people. Got you.
And so in this current iteration of the advisory business, how long have you been doing that? And then when did you come into the Steamroom? How did that all kind of pair up?
So the Steamroom was, I think it was right at the beginning of 2016. I actually thought it was a little earlier, but I think you told me. I know Jay was there, so if that was 2016, that was the beginning.
I think we scooped up Jay in 2016. So yeah, you must have been the first line of people that came in when we joined with Jay, when St. Lucie and Wall Street Jesus kind of merged together. Okay, cool. Got you.
I mean, I was in San Francisco. I loved Twitter. I'm sure I saw you guys somehow on Twitter. Probably saw Wall Street Jesus. I mean, I saw a bunch of other services that I checked into for about 2 seconds, and thought, oh my God, these guys are full of crap. And I felt bad for the people in there. And I loved the approach of the Steamroom of not telling you what to trade. In fact, Jay often tells you, good luck.
Yeah. Yeah.
And I like that. I like that you're making your own decisions. When I tell people at the Steamroom, which I do tell everyone who's interested in trading, that hey, you got to check it out.
Thank you.
Absolutely. They all, the first thing they think is that, these guys are going to tell me what to trade, or are they making a lot of money? And I'm like, they don't do that. They give you information that you process and decide what you want to do on your own. And like everything in life, some of the indications can be a contrary indicator. There's even some people, I won't name them, in the past for me have been a contrary indicator, and have been successful with trading against them. But for the most part, there's some great traders. I mean, there's some great traders now. There's some great traders in there that I recall from the past. It's always kind of a bummer when someone disappears. I disappeared for a couple of years, and hopefully people miss me.
They did. I know. I remember when you left for a bit, and people were like, "Yo, where's Kelmon? What the hell? Like, yeah, this is a major input into how I think about things. He's gone, so it's cool. It's cool that you're back. Yeah.
So I love being back, and the thing I really like about the Steamroom is the camaraderie. I mean, I get a ton of ideas, and I love the information, and it's gotten better and better and more refined. And I do love that. But I love the camaraderie. I grew up. My sport was golf, and it's very similar to trading. It's something you do. There's no one else to blame except yourself. You beat yourself up, you can, or you can learn from every shot and then try to be better on the next one. So there's a lot of similarities to the two.
Yeah.
And I'm a bit of it's interesting. I'm a social person, but I'm a bit of a loner. I like to be responsible for my outcomes. But sitting and trading all day and looking at the screen, I got tired of CNBC and that type of thing in the background. So it's great to have a group. I feel like I'm in a group every day that mostly supports each other and provides some good ideas. And I think the more you put into it, the more you get out of it as well.
Yeah. Well, I got a lot of questions to ask you, a lot of different directions to go in this, but one of the things, I mean, I'm always fascinated by the parallels between performance psychology from other walks of life and trading. Lucci and I are big tennis players. We often talk about tennis. Anybody who's played tennis kind of at any level knows it can be just a torturous mental sport, and it does sort of train you a little bit for trading. Golf might be, I don't play golf in part because I was like, I already have 2 out of 3 white dude sports. I have skiing, I have tennis. If I could play golf, I'm just a walking stereotype. But also, the only couple times I've played, I'm like, this is crazy how frustrating this is. Like, I would have to dedicate so much time and energy to this to be good at this without like comparing myself to everyone else on the course and sucking way worse than them. And I think which is all a long-winded way of saying I have a tremendous respect for anybody who plays golf consistently and can maintain their sanity and not just be like a very almost like Larry David-esque person who's walking around like cursing the world. I mean, how do you feel like, there are things that have like materially translated from golf, like lessons you've learned, skill sets you've cultivated into trading? Or is it kind of like, no, I go play golf to blow off steam?
No, absolutely. Yeah. So my personality just in general is fairly calm. So I'm not the golfer that, hits a bad shot and throws his club and swears, because I know that I was the one that hit that shot, and maybe they're going to learn from it. Or, when you see people out there going, swearing, and I go, why are you playing? Like, it's supposed to be fun.
Right.
I'll tell you an example. Where the market hit me, and I should have been, oh my God, throwing my clubs, so to speak, is I was in Las Vegas. I think it was 2000, maybe 16. I was in the Steamroom. Twitter had gone public. I was a big fan. I thought the stock was going to do really well. It didn't do very well. It's one of my big lessons in the market is Twitter. I stuck with it too long, both on the equity side, but the one trade that I'll never forget is I was long couple hundred Twitter calls going into the earnings report. Had a decent profit in them, and I still do this. I still will buy calls, not waiting for the earnings report. I like to get the run up and the fever of people buying them, and then I sell mine before the report comes out.
Right.
Some of you guys may remember this, but I think it was 2016. About 20 minutes before, so I'm sitting by the pool about to sell my calls. Okay, yeah, decent profit, not as good as I'd like. Twitter accidentally reported earnings early.
Oh shit!
20 minutes before the bell, and they were terrible.
Oh god!
And my calls went to zero. They went to a dime. And I was, oh my god, inside I was just, I guess what I normally do, and I think this comes from golf, is I actually kind of just started laughing. There's nothing you can do. Upset, but again, not going to throw my clubs. But God, that still sticks with me. I mean, that would always stick with me. I'll tell that tale over and over.
Were you always like that? Where you were just like something crazy like it happens and you just got to laugh? Because a lot of people would there's a lot of different reactions that people would have.
Yeah, no, I mean,
I was like that. Is your temperament? Yeah,
I think I have been. Like, when I get kicked in the shin or something really hurts, I go dead silent. I don't give the ow, I don't give the scream, because it's like it's not going to do me any good, and it's going to upset the people around me. And so yeah, I think I have had that, but I started playing golf at a really young age, and I watched people get upset. So I do think that has translated into just staying calm and going to the next shot and going to the next trade. There's always another trade. There's always another trade.
Yeah. Yep. Wow. Okay. I mean, I hope some of the newer, Matt, Kelmon and I were talking prior to this before we went live, and I was like, we kind of have two audiences for all the things that we talk about. And one is the aspiring trader, the trader who's like trying to find their way and going about things the right way. As you said, they're not looking for handouts. They want to learn. They want to learn from good people, and they're trying to find those people, and it's hard to find, in the public sphere. And then the other audience is like the professional trader who's doing things at a high level, but is kind of more like you, Kelmon, who's like, I don't really want to just like sit alone in the office all day with the screens. Like, it's nice to have people to bounce ideas off of. Oh, hey, I can learn, pick up a little skill set here from this person. Like, people are always trying to learn and evolve their game. And I hope that some of the more aspiring traders are hearing and listening to this and seeing your perspective of just like, it sounds like basically radical responsibility of taking responsibility for yourself, right? Yeah. Just being like, everything that happens is my decision in business and trading and golf. Like, it's all on me. So
yep. No, I definitely believe that. And it brings up a different opposite side of the coin. Is now I'm going to reel you back to 1995, 1996.
Yeah.
And I was ecstatic at the time. I bought some IBM calls, back when I used to play earnings, because I thought that's what you did.
Yeah.
And again, we were trying to decide who was going to take the commission dollars home to pay rent back then. I put about $1,000 into these IBM calls, and the next morning they were worth $42,000, and I was ecstatic. And it was my first big trade, and I thought, like everyone who hits the first kind of big one, like, this is all I have to do. Never have to work.
I got to figure it out. Like, it's done. Yeah.
And I always say the worst thing that can happen to someone who gets into trading options long is to hit a home run on the first one or two tries, because
100%.
Couldn't
agree more. Couldn't agree more. It's the hardest thing for us to deprogram from people, man. I really feel bad for people, sincerely, when that happens, because it's brutal. Yeah. Anyway, go ahead. Yeah.
So, and I've spent most of my life, again, I was, in the 99, 2000, 2001, I was trading about 1.5 million options a year. we're trading 100,000 calls a month. And again, almost exclusively selling them. It worked. When it didn't work, the client's still happy because they didn't make as much as they would have made, but you're still making money. One thing I learned early in the business side of it is making people, big money is great, but just not losing their money is goal one. And the way I run my business now is very, very conservative. I try to make 1% a month from option premiums. Use the top companies in the world is what we use as a core. Something you're not going to be upset that if you get stuck owning it for a little bit, that's okay. And knowing, over I've been in this game for 32 years. The game is rigged to the upside. So if you stay in the high quality stuff, we were just at an all-time high 2 days ago. So by definition, if you can stick it out, you're gonna do just fine.
Come back around, yeah.
And I trade a little longer. I'm more of a swing trader. I'm looking at where I think the market's going to be, early next January versus, some of the really good traders in the room who are concerned about, where it's going to open tomorrow morning, where it's going to be at 5 minutes later. And days like today, when there's, the bombs are flying, I was talking to a couple of guys in the room, and early in my career, I would have panicked on 9/11. I would have panicked during COVID. I would have panicked during the .com meltdown. But you realize that those have been some of the biggest buying opportunities, in the last 30 years. And the one that I was spreading around the room a little today was, and I think Ranchero too, was, when the bombs fly, it's time to buy. And it's in your head, you can't believe that. But if you look back in history, it just plays out. And in a bull market, we're in a bull market right now. To me, any decent buying opportunity, you get some, you get a pullback. I'm a believer that price leads, and then a narrative's written to why the price did what it did. Today it was because of this, but really, to me, they were marking up the tape on yesterday. You saw that close, ripped green. I was a fund manager. You got to show everyone what you own on the last day of the quarter. We didn't have that much of a reversal today. So to me, big picture, bull market, buy pullbacks. Bear market, big picture, sell reps. So those are just things that I picked up over the years.
It's one of the reasons why having you and some of the more experienced, really good professional traders in the room has been so helpful, because there's newer traders who come in and guys who are young, and they might have 5 years experience or something, but they just haven't seen a lot of life too, in a lot of ways. And things like this happen where, sometimes you open the headlines, and today, it's like, wow, Iran sent missiles into Israel. That's going to, stir up some emotions for people. But the perspective that you guys can bring, that you do bring into the room, of just like keeping things steady and calm and chilling, really thinking through things, and not being reactive, not jumping to quick conclusions or anything. I think it's one of the things that keeps people, helps people learn so much, in our room, rather than just piggybacking on people's trades. And it's one of the things that differentiates things. So, thanks to you for always kind of being one of those voices in the room, who's like, hey, we've seen some things like this before. Not my first rodeo. So
I play the opposite side too. When things are just going gangbusters, I also know, because I experienced them, that you can get a long-term capital situation like in '98 where the market drops in a second. You can get 9/11. I was on my way to work when that happened, and market was closed for a few days. You can get bit too. So, and if you're in the game long enough, you will get bit. So, managing risk is number one. And so when I say, buy, I love pumped up vol like we had a little today. And when the VIX hit 60 back on August 4th, it was a great day for us. I had a lot of people check in and say, how'd you do? Any puts I was short, I rolled down to at the monies. That, when the VIX hit 65, the vol went through the roof. If it hadn't snapped back, I would have done fine. The fact that it snapped back, those puts deteriorated as the VIX imploded as well. But I love selling risk premium.
Yeah.
I play the part of the casino instead of the gambler. And that's all I do for clients.
Yeah, that's one of the things I want to ask about. I mean, I feel like a lot of traders have moments where they really connect the dots in terms of, oh, this is my style. This is what works for me. I mean, was there a moment for you where like, yeah, I want to be selling. Like I want to be writing options like all the time instead of obviously being.
Yeah, I mean, especially so I'll tell you, I'll twist that a little. When I was running the three mutual funds, we were long only.
Mhm.
So we had to be long stock, and I'm going to badmouth mutual funds a little bit because it made me. I'll never own a regular mutual fund again. I don't own an ETF because you can trade it. But
Right.
two things happened. In like the .com bust, had to be long. You have to have 90% long. You can't be in cash. If you have more than 10% in cash, they think you're collecting fees on holding people's cash. So you have to keep buying stocks. And then in a bear market, when people are pulling their money out, you have to keep selling stuff at lower prices. So I didn't like that. I wasn't selling puts at the beginning. We introduced a third fund that was able to sell secured puts. And so I'm not talking about naked puts where you can get, fried. Actually, with a mutual fund, you have to have 120% of the buy-in price for the equity, which makes no sense. But if you've got all the cash there, I'm a huge believer right now in selling secured puts. And I only do it on, again, on kind of the bluest of the blue chip names. But yeah, I mean, versus just having to own stock or gambling on which way the market's going to move. I mean, our whole marketing pitch when I was running those funds was we had all the stats of 72% of the time options expire worthless. Why wouldn't you want to be on that side of the game?
Yeah.
You can hit a few home runs, and I had times, I was buying some puts and calls for myself at the time in my own account, and I think the best way to learn, or the only way to learn to trade options, is if you're buying them, is to get your teeth kicked in.
Yeah.
You're not going to learn by winning, and nobody has the patience unless they don't have the money to sit and do it as a paper trader. So. I had my teeth kicked in enough times early that I know I didn't like that. It wasn't fun anymore. And so, the conservative side of it is plenty good. And if you could make, 12, 15, 18% a year, kind of even if the market's flat, to me, that's excellent.
Yeah. Hell yeah. Especially, when you're managing client money, at the scale of what you're talking about. Can you take us a little bit through just kind of your trade process, right? So you wake up in the morning, you open up the Steamroom, you open up your screens. Are you looking at the flow, the J's tagging? Do you have certain technical patterns that you like? I mean, are you digging into company fundamentals? What's your process like? For
a little of everything. So the fundamentals, I'm not looking for the next XYZ. I'm looking for the current one. So I'm trading things like Apple, Amazon, Google. I like when there's flow. It's important to me. I like when reverse indicator for sentiment. I love when sentiment is terrible if I'm going long. So the kind of the most bullish trades I make that aren't equity trades are risk reversals. I put on a risk reversal today. So I'll take you through this morning for me. I'm West Coast, so about 3 a.m. every day, I have my phone in the bed and I look over and I look at the futures. By 3:30, I'm kind of looking at, is anything kind of out of the ordinary? Google.
What time are you going to bed? What time are you just passing out? Like 6 p.m.? Like, what are we talking
about? Not
that
early, but I've been doing it forever. I haven't set an alarm since 1992, and I'm up at the computer at 5:30 after. I call it intermittent sleeping, and I am serious about this. You really remember your dreams. You wake up at 3, go back to bed at about 3:30 for a 70-minute sleep cycle.
Yeah.
You really remember that dream, and then I wake up one more time, check futures again, check the market. And I have one more little, probably 50-minute session of sleep, and then I'm up for the day. I drink a lot of coffee.
Polyphasic sleeping. That's what Bill Clinton did. So, supposedly he's a pretty smart dude. Whatever. Who cares what you think about politics? But yeah, that's legit. Wow. Okay. California life as a trader.
I don't drink alcohol. I do drink a lot of coffee. I think that helps me, sleep. Not the coffee, but not drinking alcohol.
Oh, for sure.
Yeah. But so this morning, Google, I looked, it's up $3 early. Market looks kind of flattish, pre-market. Market pulls back. Google sells off a little, but is hanging in there. So I give it a couple 2-3 hour test. Ended up selling the November 165 puts and buying the 170 calls. When Google was just slightly down, the rest of the market was getting thumped. So I'll stick in that trade for a little bit. Risk reversal to the upside. I liked the strength. I thought it was, I even said in the room, I think, look at Google, if this isn't a tell, I don't know what it is. Hanging in there, it was the only green stock by midday. I didn't even see where it closed, but I think it closed back up close to 170. So that's already got about a $2 profit in the net in there already. But I'm going to stick with that one. Probably turn the long end into a spread and close the short put eventually if it continues to go my way. So that's the type of thing that I'm looking at.
Got you. Okay. Got you. And so there's a lot of different styles. Of course, there's in the Venn diagram of what everybody does in the Steamroom, there's a ton of overlap, but it's not 100%, right? There's stylistic differences and certain people are looking at things in different ways. For the most part, you don't really have a problem tuning that out? Or is that something you're like, oh yeah, I don't really trade like that, but I'll look at Silvers when he talks about something a certain way? Like, how does that factor into your process, other people's inputs, other people's processes?
No, I try to take the best of all of it. Like you said, Silvers is a perfect example. The first time when I was kind of back in the room and Silvers was like, the SPY's a short here. And then I realized he was covering 8 seconds later. And, when I think of a short, I'm thinking of it, is it a short like for the rest of the quarter or
right. So, time horizons are important. Yeah.
But that can help me with my entries. If it's SPY or Qs that I'm looking at, and he said, and I'm looking at put on a long spread there, and he's saying it's a short, I'd rather buy it, 50 cents cheaper. Yeah. Enter there. So I do pay attention, and various guys in the room, I connect with on and you get used to what their style is. And, I just try to pick out the parts that can be helpful to me. Again, I'm not a micro trader. I rarely trade stuff intraday. But I think you can pick up pieces from everybody and put it to work for your own system.
Yeah. Yeah. I mean, you're a great example too, of just like the relationships that can be formed in the room. If people are watching this on YouTube, you can go look at the interview we did with Smitty, who's another member of the room, younger guy, also managing client money, for the first time. And Matt and Smitty have been able to have a relationship and learn from one another. And I know Smitty has said he's learned, a lot from you and, in that process. It's cool how for us to see, the ones kind of running things, to see these relationships go offline, right? And someone tells me like, oh yeah, I talked to so-and-so on the phone the other day. I'm like, that's awesome, man, that you guys it's not just all happening in the Steamroom. Like, people are having really good, productive conversations and doing deals together and, stuff like that. That's the game. So,
Ranchero is one. I mean, Ranchero he was a member of the room at the time. And that's where I became friendly with him. We lived in the same area. We met up at a club I was a member at up in San Francisco. And I haven't seen him maybe even once after that, but I consider him one of my friends. And even Ozzy, who was in the room, he and I were having a lot of off. I love the really interesting guys. Ozzy was a classic. I mean, he came in and made a few $1 million and then took off.
Yeah, dude. I mean, the characters, it's one of the best parts about this business. There's a lot of characters bouncing around,
Yeah.
So it's part of what makes it fun. Yeah.
Yeah. I mean, I think the goal, I'd be surprised if the commonality of pretty much everyone in the room is anything not to work for someone else. I mean, the goal is, it's, I love my work. I'm able to trade, and I'm also able to, have a real business, but I work for myself, and I don't report to anyone. And since 1992, I have woken up or have gone to sleep every Sunday, kind of like ready to go to sleep soon so I can be up and have it be Monday.
Yeah.
And if I was tarring roofs, no matter how much money they were paying me, I don't think I'd feel that way.
Yeah. I mean, that's not a lot of people can say that. So yeah, that's having made it, certainly in on a couple different levels. I mean, I'm curious for like, obviously you've been in the room a bit and you've been around tons of traders, in your time. Like, what do you, maybe we'll keep it to people in the room. Like, what do you feel like are some of the pitfalls that maybe someone who's watching this, they're a year or two into their journey, like, what do you feel like are the things that people could avoid if they just had someone, keep your eye out for this? And maybe it has to do with writing options. Obviously that's part of your expertise, but yeah, what would you say if you could kind of give some advice to the public on that front? Like, what are the things that people could avoid that are unnecessary mistakes?
So over trading is number one.
Yeah.
I mean, you can look back again. I love when a third party will do kind of a report on stuff like this. But there's really, we call them trend days now. If you sat, most of the time, I think it's great that Lucci takes off after a half hour sometimes because he recognizes this isn't going to be the day I can sit here and stare at the screen. Nothing's happening.
Yep.
Being opportunistic, and the main thing about being opportunistic is not grinding yourself up. When we're not having a trend day or there's nothing moving the market. Over trading, if you're trading options, especially, I mean, you just get destroyed when things go sideways. If you're buying options, those days are great for me. I'm watching the theta decay and etc. But I really think it's waiting for your setup, and it's so hard to do. It's like being at the in Vegas and saying only play once every couple hours, and you're sitting at the table and everyone else is like, silver's just made 37 grand in 8 minutes, and you're like, wait a second, what the heck am I doing?
Yeah.
So over trading, waiting for the absolute best setup, you're going to miss some great trades. I mean, I get as much FOMO as anyone else. I miss trades every day that everyone else is in. What was it, PDD recently? I didn't even, once I feel like I missed it, I just don't even look. But
that's a good tactic right there. That's a good lesson. Just that right there. Yeah.
That's it. I mean, it's there's always another trade. So, I say I get FOMO, but I'm quick to shake it off because I know there's always another trade. The best trade of your life is more than likely ahead of you, not behind you, unless you're Aussie. Then maybe it's behind you. But
took down a couple million, in like a 2-week period. Yeah, that's hard to replicate, but yeah.
That was awesome. That was almost worthy of a Netflix special.
Seriously, man.
Classic.
Yeah.
There's been some other good, I remember Paulo in the room from way back. He was in England. I think he was had loaded up on puts right before the COVID crash.
Yep.
I don't know how much he made, but he disappeared. But hopefully he's living the good life.
It's funny. It's like people disappear like that. And I'm like, okay, this guy was like a spy and he got like assassinated by like some foreign government, or he's on an island on a yacht somewhere. And he some people hit that trade, and it's, as you were describing at the beginning, it's overnight success that is actually 10, 15, 20 years of stalking this perfect sort of setup, and your brain is just doing endless sort of calculations in the background. And then that time hits, your number comes around, and as Chris Cady likes to say, sometimes they give out free money and they put on enough size when that happens and they're gone, and that's cool. I mean, it's cool to see people hit that like escape velocity like that. So yeah, but people kind of shoot off sometimes.
And it's awesome. And I think we both know that a majority, people who are generally, making $100,000 trades profits, it's balance. If you're making that much, you're probably losing that much other times. So you got to be willing to stomach that. Not that much more, much different than playing, $10,000 hands of blackjack. You don't just win them all. You're going to lose some too. So, sizing properly, I guess, would be the second answer to your other question. Being patient, sizing correctly. If you're stressed about a trade, everyone violates this, but I'm still going to say it. If you're stressed about a trade, then it's too big. And if
That's kind of the
not
Paul
stressed
Tudor
about it,
Jones mentality. Yeah.
I mean, it's nice to have small enough size on that when it goes against you, and have some time. If you have time and size is small enough, and you kind of go, all right, I might lose half this, and you're fine with that. That's great. If you need that to make your mortgage, it's going to go against you every time. Every time.
Yeah, trading is one of the only highly competitive endeavors that you can choose when you get to play, right?
Yeah.
I mean, as a tennis player, I wish I could be like, hey, stop, time out. I don't want to play this game anymore. Like, I want to take a day off, then come back, pick up right here again. It's like, no, but trading's hard enough. We always tell people, take whatever gifts it gives you. And one of them is you can choose, you can change your position sizing. If you're exactly as you said, if you're uncomfortable, change the size of your position, or get out, you can always get back in. So take advantage of that. Yeah. Gotcha.
And I think I also, to really press this home, I mean, and no one who's really interested, who's sitting in the steam room every day probably is capable of this, but there's really only a few days in the entire, I don't know, there's 250 trading days a year or something like that. There's probably maybe 8 or 10 of those days that if you just traded those days, your P&L at the end of the year would look a lot better than if you sat in there every day. But God, it's addicting. So it's very tough to stay away and be that disciplined.
Do you find that the room, because some people find that the room actually helps them, it's almost like, this is my dopamine fix instead of trading, so they can sit in front of their screens and stuff. There's nothing to trade. Okay, I'll talk to guys in the room, talk about ideas. Sometimes it's talking about bullshit, but at least I'm doing something rather than just putting on trades because I'm bored or I have to do something. Do you find the room helps you at all with that? Or are you more like, hey, there's nothing to trade, I'm out, I'm going golfing, or I'm doing something else?
No, I definitely see that. I like the camaraderie. I love watching other people make money. I love when someone's doing well in the room. Makes me super happy. And Jay is priceless. Ranchero, incredible addition. I really trust. I think that's the word. I really trust Ranchero as a person. He's super blunt. Throws around more F-bombs than Lebowski. But my daughter, she's 6. She'll be like, "Wow, they keep saying the F word." I said, "That's part of it." I put on my headphones.
Right.
But I love the camaraderie of the room. When I need to get paperwork done for my day job, etc., I don't turn off the steam room. I have it on in the background. Awesome. I love having it on. And I love the newer edition of the ticks. When you hear the tick tick tick, something's going on. It kind of it's great. No, it's excellent.
Cool. I'm just looking through my list of questions to see if there's anything that we're sort of leaving on the table. I mean, there's so much that I could continue to talk to you about, but I think that we've hit a lot of it. I mean, maybe if what would you say to somebody who's who's watching this and they're just like, yeah, maybe I should check out this room, maybe I shouldn't, why do I need to go be in another one of these rooms? They're most of the time a distraction or whatever. I don't know. What would you say? You're a pro, you're doing it at a very high level. You have been in our room for a long time, and you spent now at this point thousands of hours in our room. There's a reason why you're doing it. How would you communicate that to somebody?
Wow. So you spend enough time in there to kind of monitor the indicators, look at the indicators, learn what each of them are, learn what not to jump on. I've introduced a few people to the room, and a couple of them left after day one and said, I didn't have enough money to trade all those things. And I said, oh, you weren't supposed to trade all those things. You're supposed to take in the info. But between if you have the time, if you're at home most of the day, I mean, I think Silvers works for Amazon, but he's still in front of his computer most of the day. So if you're there most of the day, and you don't want to just kind of look through IBD and look what the hot stock is and buy that and pray. between the camaraderie and the things you can learn, I love the webinars. The Thursday, Sunday, those are great. Really, gets you down in there. I think when almost anyone starts trading, they don't realize how counterintuitive trading can be. And that's part of getting your teeth kicked in when you're young. You think, great earnings report, this is going to be up, but then it's down, and you go, oh my God. And then you look where it came from. Ranchero points that out a lot. Well, look where it came from. The thing was up here, and of course, it was going to drop no matter what, on good news or bad news. And those are the things that I think younger traders, need to learn before they throw their money out there and go, I was right, and then you lose all your money. I mean, it's being right is just about the P&L.
Yep. Great line to end on. Being right is just about the P&L. That's awesome. Well, thank you for doing this. Thank you for being such a big part of, the room, the community, for sharing all your knowledge. So many people, it's, we're definitely way better off for having you, for you being in there and being a part of it. So really appreciate you doing that and coming on here and sharing a little bit of your story. I'm sure this is not going to be the last time that we do a public conversation like this. So
thank you, Charlie.
Yeah, for sure. Thanks, Matt. Talk to you soon.